I'm your host, Janice Matui, and this is A Sit at the Table. A Sit at the Table delves into the intricacies of professional skills and emotional intelligence, offering insights on how you can thrive in the present and ensure long-term relevance. Serving as a gateway to mastering today's evolving professional and business landscape, our focus is to equip audiences with the necessary tools that ensure they thrive in the present, but also secure enduring relevance in the future. So join us, like and subscribe, A Sit at the Table, only on YouTube.
My name is Evelyn Kaingu, and I'm a co-founder and CEO at Lupiya. I'm an entrepreneur in the Fintech space, and Lupiya is an online platform that provides online loans, investments, and payment solutions, and we provide neobanking services to the Zambian and Tanzanian market. I mean, telling it now, and I hope I don't get emotional about it, but Lupiya was born out of a failed business that my partner, Kaingu, and I built. We were getting orders. We couldn't fulfill those orders simply because we couldn't meet a lot of financial requirements that the banks needed for us to extend on these big ticket orders that we were getting. And unfortunately, we couldn't fulfill a number of orders that we had received, and we had to shut down that business. And evolving out of that, we thought we were then going to build the next generation SME bank that would allow a lot of individuals and SMEs like ourselves who couldn't meet so many financial obligations to be able to access financial services. And that's how Lupiya was born. And as we were starting and getting into this, by the way, setting up a bank means you must meet a certain banking requirement. We didn't have that kind of money. And all we had to our name at the time was 5,000 kwacha that we used to then go into a community group in Ngombe. We gave this money to a group of women, entrepreneurs who were basically roadside traders, women who were looking to sell any small item to leverage to make ends meet. And we were able to leverage that community to give loans to this community. And I remember at the time, as we were doing the first loan book, we ran out of cash. I was a new mother, and every saving for me mattered at the time. And I think perspective at the time was, what am I leaving for my child? And we were pulling out additional, I remember specifically the amount was 1,800 kwacha additionally to make the loan book 6,800. And I just remember in that moment thinking, oh gosh, if I lose this money, then my child doesn't have a future. And so it had to matter what I did. I went to these women, I think, every 1 week because, of course, I was panicking as a new mother, just making sure I was giving them the right financial literacy, making them understand what they were doing, the obligation of getting the funds. And I remember at the end of the month, we had a very successful collection rate and very exciting. And from at that point on, I knew a business was imminent for us. I went and did business cards, company profiles, to make the whole story very legit. And so going back, I gave the women the money again, and I had a 50% default rate. And so just thinking back into that challenge and failure at that time, going into the second month, and because these women now could not meet the obligation, because the one first lesson I hadn't learned at the time is that transaction history was very important to be able to leverage this community to continue to give them additional financing. And so had lesson learned, and we had look at other avenues on how we're going to give additional funding out and just position us as a company. And so we looked at what the banks were doing, what the other MFIs were doing, and we opened up additional products, which was basically lending to individuals. And we focused on the folk in full-time employment. It had very clear parameters and how you'd underwrite a facility like that. And very quickly we adopted that. In a weekend, we were going to build a website because that's the only way we're going to access this clientele. We were perpetuating as a microfinance entity with just having earned about 8,000 now at the time. And we had almost lost half of that. And we had to really build the confidence of the communities out there, the people that we were targeting, that we actually were an entity that they could lend money out to. And I remember putting up the website, and we had 10 applications. And the total applications were about 20,000 kwacha, we had 8,000. And so I had to make the first rejections simply because we just didn't have the funds, but there were people who would qualify. But fast-tracking that story, we then set up the business. We do a friends and family round. And one of the key things, having gone through an incubator, my story is never complete without mentioning WEAC, just taking us through the business modeling, the financial modeling tools that you need for you to build your business. This then helped us on that trajectory of thinking about three key things, which was people, the team that actually you leverage to be able to achieve what you're looking to do. Secondly was revenue. The focus was about building as much revenue as you could for your business to be able to grow from that point on. And then drilling down to what the strategy was going to be. And so my business needed two things, which was cash and the people, which was basically the customers in this regard that I needed. And so I needed to grow by 10, 15, 20 customers on a monthly basis. I needed the cash to do it. And the only place I could have done it was either get it from friends and family, because the banks were not going to be able to do it. The financial institutions were not going to be able to provide this access to funding because simply we didn't meet the requirements at the time. And so we did that. We did a friends and family round, raised $50,000 from family and friends. That helped us catapult our small growth to a point where we knew at a specific time that the business was going to need a certain amount of cash to be able to scale. And to do that, we were working towards getting revenue of over 1 million kwacha a year. And that meant that we were positioning ourselves to be able to leverage additional investments from the external community out there. So by external communities would be outside the country and investors looking to invest into entities like ourselves. Very quickly, I learned as I was now looking to fundraise and making a lot of applications was that a lot of investments were looking at people who already making over $1 million in revenue as an entity. And so very quickly, I had to position Lupia to be one that was very female agnostic, female-led, a female looking to position and help a segment of individuals. And this is what I did with Lupia. And with my co-founder, Muchu, we set out to really look for investors, which was a lot of rejections, a lot of applications every day. And finally, Enigma Ventures came through, which was basically a fund that was investing in women-led entities in Southern Africa. We resonated with the brand. It was built by a couple. And by the way, Lupia as well was built by a couple, which is with myself and my partner. And very quickly, we were able to align with Enigma. They made the $1 million investment into the company. And at the time when it was happening, I think a lot of us as entrepreneurs, we have this imposter syndrome because you're working constantly towards a goal. And when it happens, a lot of people were saying $1 million has been raised in the country and it was such a big deal. For us, it was, we've now gotten the $1 million and we've said we can deliver on a certain number of customers and revenue. And that's where our minds were focused on. And so a lot of times it's basically a quick win celebration. It takes you a day or two, and once everything's cemented, you realize that the journey still continues and you're still on that trajectory of raising your customers, generating as much revenue. And finally, one key line item that hits you as you look at your income statement now is everyone's looking at your EBITDA lines and you're thinking, how do I balance all of this? In a segment where I've gone that's very high risk, SMEs don't have collateral. I need to make sure I can fulfill a return. And so very quickly, you start to look at what the community out there is leveraging in terms of looking at technology adoption very quickly. How do we scale quickly to the additional markets in the rest of the provinces, which was basically the model that we were trying to prove. And at the time, as we were talking to individuals and people about how we're going to build an online company, we had the worst rejections, the laughs in your face to how it's not possible to do it in a country like this one. And so it was about defining a lot of odds, ensuring that we can deliver on a product. Finally, with that Enigma investment of $1 million that helped us scale to the point where we're now positioning to our Series A. And with our Series A fundraise, we were headed to raising $10 million. And on this hurdle, as you look at worldwide statistics, it takes about 6 months for an entity to raise. It took us 2 years. And we kept talking to it about, with the team, and the team at a point even got to a point of thinking, is this even really practical? Is it ever going to happen? And can it happen from a country like Zambia? And even as I speak now, in that whole positioning to fundraise $10 million, we've only been able to raise $8.25 million. And so it's really still a journey of convincing a lot of investors, a lot of external stakeholders to really participate in this journey, and to just really, and I hope I really answered that question in making sure that a lot of key milestones are really clear and understood how we actually got here. First insight, I think, or first role model has always been my partner, which is my husband in this case as well. He's very driven, very dedicated. And so I pick a leaf from that, and I think that's what has also helped me create that balance, even as we've worked together, is maintaining those two things. And in an unfortunate case would have been Elizabeth Holmes. It's unfortunate of what was happening in her situation. But from her very quickly, I was able to pick up that quiet power and aggression of really trying to redefine a space that is untapped. And it's from her that I learned that concept of having that first mover advantage and trying to really work in a space that will allow you comfort, passion, and that dedication. And it was very good for me to have her as role models. As I came into the Enigma space, I had Lelemba and Sarah. Lelemba is a very prominent, and I think she's very underground in sort of the support that she gives to a lot of entrepreneurs on the continent and really connecting funding to a lot of individuals. But it was very reassuring to see someone in my color and space just really owning it. And I learn a lot from her every day until now. She's a great mentor and someone I leverage. Coming into Enigma, Sarah was someone who had exited from a $100 million business, built it from scratch, as well in a very lean model, and really building on very key fabrics that you need to evolve, which is, I come from that background because coming out of school, I'm an economist. I will not have entrepreneurial skills. And at the time, I think as an economist, the only thing you get to do is like basic financial accounting. And a lot of things you learn along the way. You don't know how to manage people. You don't know how to run your operations. You don't know how to design products. And a lot of that, you learn a lot from people and just leveraging what skill sets they have. And so I was able to pick up a lot of key items around just putting key or A players together to help you leverage the skills that they have and bringing their capacity together to work for you. The one that always resonates very clearly is just really owning your space and staying in the game or as relevant as you can. A lot of entrepreneurs tend to ask me, at what point do you feel like quitting, right? I felt like that every 2 weeks to just really change what I'm doing. But I think there's always something that burns in you that really resonates and really sticks to what you're truly passionate about. And one of the things that sort of sit with me again is what I read, the people I leverage information from, and just really using that to really keep you going, to really stay true to what you're truly trying to set out and do as an individual. And mine would just be staying in the space longer, redefining a space that you feel you have truly owned. And from there onwards, you have to leverage technology. We still live in a time where, or rather we've moved into a time where technology adoption is really growing up, rather moving at a very fast pace. Last year, we're talking about Bitcoin and crypto. This year, we're talking about AI and how it's revolutionizing everything that we're doing. Now we're talking about open AI. And so at what point do you start to leverage what you need to be doing in your business? Would just really resonate into how you try to pivot as a business, and how you try to stay as much as possible in the game. I think we've managed to leverage a balance, and I think one of the key things, him and I, is that we have very core competencies that we leverage off of each other, and very quickly sitting in this space and really learning how to leverage skills from individuals. I am one person who very clearly knows what my capacity is and how I need to draw people in very quickly. And so even as we were building Lupia, one of the key things and key team members that were needed to be able to build an online platform was an IT person. And he was the only software developer I knew. And it was very important for me to know that I balanced that and how we were going to work together. And so very quickly, him and I were able to really redefine our roles. And so they very rarely intermingle. But at the same time, I've also, as I've leveraged a book, Principles by Ray Dalio, and looking at a very serious component of core CEO modeling or of running operations, very quickly I realized that he was very instrumental on building the technology that we needed in the business, running operations on the sense of implementation of that. And so very quickly, I know I drive strategy. I resonate very quickly with teams. And so I made sure that distinction was very clear. And that's how we've made sure, or I have made sure at least that balance exists. And I know very well not to run in his space. And so this is something that I know that I do very well. And that's how I think we've managed to create that balance. Mine is always different because I work with a partner, so I see him throughout the day and I see him throughout the night, right? So very intentional. We have a cutoff or at 7 p.m. No one talks about work. Lupiya, that's a story that we don't want to speak about, no matter what's happening or burning on that other end. I'm still struggling on work-life balance. I've always joked around even in the office and said, how do you do it? So one of the things I have leveraged is just a lot of mindfulness, a lot of gardening. I do that a lot. I'm still trying to master yoga. And I've always joked with my mom and said, I think I was too perhaps traditional in a sense that I don't understand the concept of yoga and meditating and sitting in front of something and speaking to you. So if it works for you, I say leverage it to your advantage. Gardening works for me very easily. I've now started to also just do a bit of cardio and walk in the gym. I walk my dogs maybe about 2-3 times a day, and that's what has really helped. And I drink a lot of water lately, so if that works for you, then that's how I find my balance. And I'm really looking to understand how you juggle the homestead and work, and they all still get intertwined. So the first one I'll highlight is we have a monthly town hall, and unfortunately it's only restricted to Enigma investees, and this is where we hear constantly from Sarah Dusek, who built Under Canvas, like I referenced earlier, which is a $100 million company. And every day she positions us based off of, and I think she uses the fact that she's got insight into all our businesses and what we're doing. And very quickly, she's able to channel what we need. And I think she's rightfully able to tailor the right content that we need to help us either manage our teams, manage the operations. And that's something I keenly attend and make sure I leverage off of, because that's created the balance. And the things that I probably don't know that I need to know and start doing in my business. Secondly, would be around 2 books that I always reference. One would be Ikigai. Second would be Principles by Ray Dalio. I can't emphasize these 2 books enough. But then again, they've worked for me very well in the sense that it's really about not working towards a retirement position, really owning a space and understanding it very well. and showing up to work every day with a true passion, committed to what you love to do. And Ikigai has helped me get to that space of getting to a point of not wanting to quit every 2 weeks, but really having the drive to help individuals, to support farmers, to support women, and really get a return, or if I could return something for my investors. At the same time, looking at building a successful company, if I can do that. And I live for those moments and truths. Again, through Ray Dalio would be around how our company is structured, working with a partner. Very quickly, regardless whether it's unsounded or not, it's really about the core partnership and how we work together and how we bring it together. And I know very clearly that it's operational and it's technology. And I leverage that from these two books, and I hope you'll find the same.